Hello and welcome to Cafe Mutual YouTube channel. Friends, equity markets have been touching new high every now and then. Similarly, yields in fixed income have also improved. Also, the prospect of gold looks good. So, in a way, all asset classes are heading northward. Then, what's the way forward and what should you recommend to your clients? To answer these pertinent questions, today we have with us Vikram Dhawan, Fund Manager Commodities, Nippon India Mutual Fund. Vikram has over 28 years of experience in commodity markets and fund management. So, without wasting time, let's welcome him. Welcome, Vikram.
Thank you very much for inviting me on your show. Thank you very much.
So, Vikram, my first question to you is that MFDs can do asset allocation for their clients through existing set of funds. Then, why should they look at multi-asset allocation funds?
Sure. So, first of all, just to take a stock of where we are
Hmm.
on asset allocation funds as far as India is concerned.
Hmm.
So, the total AUM of the multi asset funds is not even 1% of the entire mutual fund AUM. Now, if you compare it with, let's say US or Europe or the so-called developed, countries,
Hmm.
there the allocation to multi-asset funds, or they're also known as asset allocation funds, can range anywhere between 10 to 30%. So you can see, as a category, it is still yet to take off.
Hmm.
So yes, MFDs can do asset allocation themselves. Even the investors can also do asset allocation themselves, but still, as a category,
Hmm.
this can only get bigger and bigger.
Hmm.
Now, why multi-asset funds? First of all, I think the wealth creation on a long-term basis is all about compounding. And what the multi-asset strategy offers you,
Hmm.
it offers you participation in the long-term trajectory of all the assets, whether it is equity, bonds, commodities, gold, or overseas equities. But at the same time, because of inverse or poor correlation between various asset class, it also ensures that you have the portfolio is less volatile than the frontline markets, which means that even during lean period of time, the cuts, if at all they happen, they will not be significant. Which means that when you have a multi-asset strategy, the compounding is a lot more certain, as against you are heavy on one particular asset class, which may do well 1 year, which
Hmm.
may not do well the next year, because historically we have seen that every 2 to 4 years, the leadership between various asset classes changes.
Hmm.
Secondly, these are professionally managed funds. These are also very well regulated,
Hmm.
and the fund managers and the fund houses have a very they articulate these specific objectives of these funds, so there is absolutely no lack of clarity on what is the intention of the fund and what are its objectives. So this all these things make it a very compelling option for the investors.
Okay. So, Vikram, each fund categories in the mutual fund industry serve a purpose. For example, flexi cap fund may be good for long-term goals like retirement, children education, or so on. And for emergency fund, liquid fund is the product, right? But where do multi-asset funds fit into client's portfolio according to you?
So you need a part of your portfolio which gives you reasonable returns with materially less volatility, because obviously, as I mentioned, that economy is cyclical, markets are cyclical, and you may need funds, or you may need gains at times which may or may not coincide with the market upcycle. So you need at least some part of your portfolio, which is called the so-called the all-weather portfolio, which does reasonably well during good times, and
Hmm.
when the times are not so good, it doesn't have that much of losses for you. So I think that is where it sort of fits in, wherein it is more of an all-weather sort of a steady, strategy, investment strategy.
Okay. So, Vikram, so how should MFDs make multi-asset allocation fund simple for their clients? I mean, how they can make the narrative more simpler for their clients?
So first of all, I think every investor has this dilemma. There are when you have a lump sum to invest,
Hmm.
and at that point of time, the valuations of whether it is equity markets or whether it is bond markets or commodity markets, they may not be cheap. Or as they say, hindsight is perfect. But today, for instance, anybody who wants to put a lump sum today, we are at historic highs as far as equity markets are concerned. Even bond yields are also, quite elevated. Commodity prices, as you have seen, whether it is, crude oil or gold, they are again, not at historic highs, but nothing is cheap right now. So
Hmm.
how do you maneuver this situation where you want to put in a lump sum money
Hmm.
and you have various asset classes where there are no bargains available, perceivably no bargains available, and also there is an uncertainty on the horizon. So there you can always start by a multi-asset diversified strategy wherein you can, as they say, start your journey or if you're an existing investor who has got a lump sum to invest, you can always do that
Hmm.
because it will offer you flexibility. First of all, in case the market cycle changes from here, then as I mentioned that historically these funds tend to have less volatility than the frontline markets. And secondly, it will also give you the option. For instance, if there is a deep correction in the markets, then you will always have the option to switch this portfolio to some bargains which may be available in the various other asset classes. Also, I think from the MFD point of view, you may also have you will also have to build a portfolio
Hmm.
which in a way is not the overall portfolio, which in a way is not extremely volatile. Because for instance, let us say if you have a portfolio which
Hmm.
is up by 10% this year, overall portfolio, and down by 10% next year, then in that case, the compounding may not be that certain, and it may not, be something that you want to have in your portfolio.
Hmm.
Whereas if you add something like a multi-asset strategy in your portfolio, then it may add some sort of a lot of
Hmm.
what we call is higher risk weighted returns, overall returns of your portfolio. So I think this is where the MFDs may want to one of the ways they may want to position this fund to their clients and investors.
So, Vikram, the last 1 year has been good for Nippon India Multi-Asset Allocation Fund as it has outperformed its benchmark. So, what are the three things that has contributed to this performance?
So if again, last year was gold's year. I mean, who could have, gold was actually in the most, hostile situation. You had rising interest rates, you had strong dollar, you had complete risk on all over the world, and the pandemic was way behind us. So, I think nobody expected gold to do so well as it did last year. Gold and silver also. We had a significant allocation to gold. This is as per the the SEBI regulations also that minimum every fund, not just our fund, every fund has to have at least 10% in each asset class, and in commodities and gold you can go up to 30%. So this is some of it is by our design of the product, and some of it is also because of the regulation. So I think if you last year if you had gold material holding of gold in your portfolio, then you would have weathered this the storm, or you would have done a lot better than the markets. Similarly, the because of rupee depreciation, it also helped the commodity parts of it, because as you mentioned, the more rupee depreciates,
Hmm.
the commodity becomes more expensive in the rupee terms. Secondly, if you look at the returns of the overseas equities, it should also be looked into the context of the rupee depreciation. So there was a significant rupee depreciation, which added to the returns of the overseas portfolio. So all these things came into play, and we don't know what will come into play this year, but we are certain that at least out of these 4 5 asset classes, at least one or two will do well, and and that should give the investors an opportunity to sort of weather the storm whatever lies ahead.
Okay. So Vikram, majority of exposure of the fund is in equity, and that too in large cap stocks. So what's the reason for this?
So I think as far as every asset class is concerned, whether it is equity, bonds, or commodities, we are a very process-driven organization. We have particular processes that how much we can deviate from the benchmark in terms of sectoral allocation, in terms of the size, the large cap, mid cap, small caps. This has all been back tested, and we also, as you can imagine, that we also draw from the experience of the other funds. So it is all very process-driven because this is one fund where we want to give a pure asset allocation play to the investor and not try to sort of time the market or sort of change the allocation materially as depending upon the view, because as I correctly as you would have seen that we don't know which asset class time has come, and timing the market is actually a fool's errand, as I would like to say. So it is better to give, instead of creating intra-asset, volatility, it is better to give the investor the inter-asset play, and that is the design and that is the objective of this fund.
Okay. One last question, Vikram. Who should invest in multi-asset fund, and what is the ideal time frame to hold this fund?
So I think both the first-time investors who are still, trying to dip their toes in the stock market, this could be a good starting point because it is a well-diversified fund, and it is always better to start with a well-diversified portfolio than a concentrated one. Secondly, people who have got who are existing investors in the capital market and who have large sums to invest at one go, and they are not, as per their own conviction and their own analysis, they're not able to see good bargains or good opportunities in any sector, any pockets of the market. And this is one thing that one strategy that they can look to invest and at least well, if not for a long time, at least bide their time till they find any good opportunities in the market. Now, in terms of time frame, as I mentioned, the leadership between the various asset classes historically has changes with every 2 to 4 years. So I think 3 years should be the minimum time that one should look before actually taking a call on whether to continue investing or whether to go for some other strategy. So I think 3 years is just about the minimum time the investors should have a look at it, if they want to invest into such strategy.
So with that, we have come to an end to this interesting session. Thank you so much, Vikram, for your valuable time and inputs.
Thank you very much. Thanks again for inviting me on your show. Thanks.
And finally, I thank each one of you for being such a wonderful audience. Have a great day at work, guys. Bye.